Hello, Jim here. I had one of my best months last month between selling options and dividends and interest. I'll share with you details about each of those. I'll go over my different trades, what worked, what didn't work. And I'll also share with you what my accounts currently look like. How did they do last month? So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now, one thing I emphasize to my different memberships as well as my YouTube subscribers is picking the right companies at the right price is probably the most important piece of trading options or just investing in general. If you get that right, then everything else kind of falls in place. So what do I mean by great companies or great securities at great prices? It's looking at fundamentals. It's looking at things like return on equity, return on investment. How much debt do they have? If they pay a dividend, are they growing that dividend? What's the payout ratio? Looking at those details. And then how's the company doing overall? Does the cash flow look good? Does it look like they're a healthy, growing company? If you can identify the fundamentals, then you can look at the price. Now, I do like to use technicals for the pricing. I'll look at the Bollinger Band. I'll see where the current price fits on the Bollinger Band. I'll also look at what is the strike price that I want to use for the short? Where is it on the Bollinger Band? And if I can pick up a stock and I can sell a put on it at a price I'm willing to own it, then again, I've won half the battle. I've identified a great company at a great price. Now, on the flip side, if you're selling covered calls or calls in general, then identifying, you found a great company, you own that company. What are you willing to part with it? What kind of return do you want to have in order to part with it? So identifying that, I'd like to get a 15 or 20% return on a yearly basis. If I can't get that, then a lot of times I'll let the stock go, especially if it shoots up and gets deep in the money and I can't roll it. Holding on to something for an extended period of time when it really has no upside because you've kind of clipped your wings with covered calls, it's best to kind of let those stocks go. Hopefully you haven't done that, and maybe you haven't sold covered calls, or you've used my new checklist. I call it my filtered checklist. It helps you identify, should you even do a covered call, or should you do something like what I call the covered call spread, meaning you also buy a long call, which gives you more flexibility down the road. You could potentially sell that long call to give you more cash to roll it up and out. Or maybe if you own 300 or 400 shares, maybe you only sell one or two covered calls versus 4 covered calls, so you go with a reduced number. Or you decide it has huge upside and maybe you don't sell covered calls at all. So again, picking out the right company at the right price and then using the right strategies is really, really important. I also like to keep it simple. I do see a lot of people out there that want to make things very, very complex. I, again, pick great companies that I want to own. Then I use strategies I like to use on them. I'll use cash secured puts. I'll use vertical put credit spreads. I'll use covered calls or covered call spreads. I will use things like iron condors on something like IWM or XLE. I'll use an iron condor when it's appropriate, where I do want to own it, but I don't really, it's not like top of my priority list. And a great example is IWM. If I can sell an iron condor, meaning a wing high up and a wing low, and it stays in between those two, and I can just book that income, then I'll also do that. So just a few things I wanted to touch on. Then probably the next most important part, especially dealing with my members, when I have a new member, especially if I'm coaching them, I'll talk about setting goals. I do mention this both in my Discord as well as my Patreon, that setting goals kind of helps you identify how well you want to do. Now I like to do a cash basis. That's why I said, I made $9,000 last month with just premium, and then I made another 2,400, I think is what the total was between dividends and interest. but my goal is 8,000 on a monthly basis. Now I may up that soon, but I set that for my whole portfolio. Now I'm looking at actually setting goals per account because you can potentially make much higher returns in smaller accounts. So I have a Roth account that's around 70,000, and I can get close to 2 to 3% on a monthly basis with that account. But then I have an IRA that's over 500,000, and it's pretty well invested already. And it's a lot harder to get that kind of a return, but I can get around 1.5% on a monthly basis. So identifying the goals, not just for the whole portfolio, but for each account is something I've just recently started to do. And it's something I encourage you to do. So if you have a small account, then maybe have a little bit higher goal for it, maybe a 3% goal or a 4% goal or a 2% goal. And if you have a really big account, go with a little bit of a smaller goal. But by setting goals, it allows you to see how you're doing and constantly try to improve how you're doing. It also gives you the ability, if you've been doing a lot of trading, like right now, it's October 23rd. I've already reached 8,000, which is my monthly goal, and I have tomorrow and all next week to continue to trade for October. So it's taken the pressure off. I'll still do some trading, but I won't push it. I'm at the point now where I've had a good month. So probably what I'll do is every time I close a position, I'll open a new one. I have ramped up cash wise. I've got nearly 50% cash in my Roth, and I believe close to 35% in my IRA. We do have a lot of headwinds. We still have a government shutdown. We still have tariffs hanging over our head. We have China having some issues related to tariffs as well as their economy. So I do believe we're going to get some kind of a correction. I don't know if it's going to be a 5%, a 2%, a 10%. We'll know once we're there. And the one thing I've learned with trading for so many years is you really don't know where the market's going. I always like to say what's predictable about the market is that it's unpredictable. So just wanted to mention that. And then what really becomes key for me, and especially recently, it's allowed me to bump up my returns, is trying to close more positions than I open each month. I was able to do that in September. I'm trying to also do that in October. So by the end of the month, I actually have more freed up cash. By closing these positions early, I have higher return on the trade. So, maybe I originally had a 60% trade and I end up with a 90% trade because I close it early. It's also helps that usually around 20, 21 days, between that 15 to 20 days or so, it seems like the theta really decays and you can potentially close a lot of these positions. I've also lowered my goal for closing them. So it used to be 80 or 90%. At times I will close around 70, 75, which again has helped me earn higher returns. But really managing your accounts is really, really important, but not overdoing it. I like to get on the market usually around an hour in the morning, and then I'll get back on, especially if I haven't made all the trades I need to make for that day. I might get back on around 2:30, 3 o'clock. But if I have a really good morning, then maybe I don't get back on in the afternoon. Or like I've had a really good week this week, I might not trade every day, or I may trade one trade versus two. My average is two. Again, setting goals really makes a big difference. So my goal is 2,000 a week, which translates into 8,000 a month, which the 2,000 a week translates into 400 a day. So I try to make around 400 a day. Now, is it 400 every day? No. I mean, it could be 600 one day, 200 the next, 300 the third day. So on average, I try to get to 8,000 on a month. And definitely by managing these trades, closing them early, rolling them when I need to. Like recently, I've started rolling some of my trades in my IRA that are expiring 11/21 out to 12/19, mainly because I have a lot of positions in my IRA expiring on 11/21. So I want to move some of those out there to limit if we do get a or black swan event and we do get a major correction, I don't want too many being assigned to me at the same time. So I'm balancing it out, having a few more expiring in December and a few less expiring in November. So that's the type of managing that I'm talking about. So hopefully a lot of this makes sense. In the next part of the video, I'll go through my different trades. I'll share with you, how I did, not just overall, but in each of the accounts. So stay tuned. I think it's going to be well worth your while. Okay, now here's my total spreadsheet for September. I just simply take my planning worksheet from September, make a copy, turn it into a total spreadsheet, and then remove the trades that maybe are just sitting there. I didn't make a trade on them. And this is what I encourage my members to do. I keep a history of all these. I'm not going to go into detail into every trade. I'll kind of touch on a lot of them. But the key things will be at the bottom. So I'll stick it out until the very end while I'll go over overall how I did. So you can see here, I started on 9/2, September 2nd, and I did an applied materials and a NVIDIA trade. Both of those I was able to close. So then on the 3rd, I closed another trade. So I started off the month by closing off quite a bit of trades. Then on the 3rd, I did open a new trade in XLE, which is, I prefer to trade XLE than a lot of the oil companies, but I did a vertical put credit spread 85.75. It made a pretty good return, nearly 98%, $211. So now the beauty of the 3 before, the NVIDIA Applied Materials and COHR, I forget what company that is, but I closed all those in the same month. So I had really good returns, 271 for Applied Materials and then 172 for NVIDIA. And each of those I made 185, 179, 155, and that's adjusted for what I'd spent to close them. So I had a pretty good bang to the beginning of the month, which was nice. XLE, I've traded it a lot. I don't own any, so I've been very successful. Typically, I'm able to close them early or just let them expire. I do have one position, but this one's still running. Then on the 5th, I did DocuSign. I do like to trade DocuSign, and usually right around this level, so 70, 60, I closed it, and then I have opened another one. And then with that one, it wasn't as profitable because I believe I had to roll it. It dove at one point, but I made 311 overall with DocuSign. The one thing you'll notice with me is I trade on a lot of different companies. I also like ETFs, ITB, which is another ETF. It's related to the construction industry, and I closed it. And then for that one, I spent $27 to close it. I had opened it the previous month, but I believe I had a pretty good return with it. Then Mara's been my favorite to trade recently, so I rolled it. This was on September 4th, and it was like 113 return. I brought in 141. So I typically do 4 contracts because they're a little less expensive at $15 a share. That's like a $160 stock. Then I did AMD. AMD shot through the roof early this month. So I rolled a bunch of these. This was a 135. I rolled it to 130. Brought in another $342. Pretty good premium. And I recently closed this. So it was only a 6% return, primarily because of it being a cash secured put. Then I did another AMD vertical put credit spread that I closed. And what did I pay for that? That one, I made 273, 134% return, closed it in the same month. Clorox, another trade that I did back on the 5th, and I closed it. I believe, I had opened it the previous month. I spent $24 to close it, which was right around an 80% profitability. I closed it once it reached that level. It only had $24 left in it, so it wasn't worth keeping it open. But Clorox is another one I do want to own. It's a good dividend-paying company. It doesn't move that much, so it should be fairly easy to sell covered calls on. Fiverr, I like fiber. This is in my Schwab account. I did a covered call. This is a covered call spread. So I own the shares, but I also bought the long call, which I made 173. This is when I probably didn't need to do that. It actually has gone down a little bit. And this was like a 15% return. Schwab, I opened a new position, 85.75 for it, expiring on 10/17. I recently closed this one too. It was like an 89% return, 189. I like Schwab. I own, I think, 100 shares. I wouldn't mind owning another 100, 200 shares. Marvel, another company that I like to trade in, and I closed 65.55. Let's see, I made 176, and again, that was included with what I closed, and it was like 196% return. So I didn't have it open very long, only 18 days. Then Zoom, I rolled a covered call. It made some pretty good premium, 304, and it was like a 1% return, which is low, but it's because I rolled it out pretty far. I currently own like 500 shares in Zoom, so I probably will potentially let some of them go. Dell, this is a cash secured put that I rolled, and I had some really good premium, so I rolled it out to 11.21, brought in $410 in premium, and this is like an 11% return. Since I've opened up this trade, I've made almost $5,000, and I still have this one. I may roll it again. Now here's some more that I closed. NVO, I closed it, and that's 330 is what I brought in after closing. So again, I tried something a little bit different. I bought 5 puts and I sold 3. I still have the three puts, but I was trying kind of like a ratio spread, and it didn't really work out too well in Fidelity. I mean, I was able to sell those puts, but going back, I probably wouldn't have bought them going forward, or won't going forward. It didn't work out real well. ODD, this is the Oddity Corp, and I closed them. I later opened another position. I believe this was in the same, no, this was the previous month. I paid $36, which this is one that I believe was pretty close to 75%, but you can see I'm closing more than I'm opening. Next one I rolled, Devon. This is just a covered call. I've owned them for a while. They've been hammered energy-wise. Pretty good premium, 131, not the best. Coke, I closed the Coke, and I also closed another Mara trade. The Coke, I spent $20 to close it, so it was like a 90% profitable, 149 for the Mara, which turned out to be a 273% return because I only had it open for 19 days. Mara is probably one of my favorites to trade currently. XYZ, this is Block, or I forget the name before that, but it's a payment processing system. My son actually uses them. I rolled it out 72.50. I rolled it up to 75, made $505. So it does have really good premium, but I did go pretty far out. This is 5/15/26, actually. I put that in incorrectly. Best Buy, I did a cover call for 75. Rolled it up to 80 and brought in another $200. So you can see a lot of different trades. Target, I like Target at this price. I believe it's near its bottom, so I've been rolling it. It was a 22 delta. I rolled it, kept the same strikes, went out to 11.21 and brought in another $282. And it was like a 79% return. So I'm fine with Target getting a sign. I actually want to own them because they pay a nice dividend. And I think we're closer to the bottom than we have been in a long time. American Airlines, this is a wheel trade that I do, 12 and 9, and I wheel it. I'm wheeling it with a vertical put credit spread versus a cash secured put. If the long put is really cheap, I'll just buy it. So I rolled it, kept the same strikes, went out to 10.17 from 9.19, brought in another $124, and it was like a 124% return. And then I closed another position in HIMS. HIMS has gotten a little pricey again. When I can get back to this 35.30 or 40.35, I'll probably make another trade with them, but they've gotten a bit pricey recently. ITB, this is a new trade I did on the construction one. I had closed one earlier in the month. This was a 103.95. And I found this thinner spread was more profitable than going with a 103. I think I could do a 93. I made 177. It was like 117% return. And I still have that one. I've been able to roll it every month. I've been really successful with the ETFs. They're definitely a lot easier to roll, and you don't have to deal with earnings, which is the big deal. Micron, it shot through the roof. This one I was able to close for cheap. Paid $33 to close it, which I believe it was right around an 80% profitability. So it didn't make sense to keep it open for such a small sum. AMD, I've closed almost all my AMD trades now. This one I did roll. This is before it shot up. 135, 125, went out to 1121. Here you can see it was 159. I wish I had jumped on it a little bit more, but I still brought in 214. I've made 487 with that trade, but now I've recently closed it. Mara, another one I closed, another vertical put credit spread. I believe I rolled it, then I closed it. Made 212 and 84% return. Like I said before, Mara is probably my favorite to trade. Okay, TA, I believe that's a security company, but this was a new trade, 80.70. And I made 255 and it had a pretty good return and some pretty good premium. I also did a new one for Uber, 85.75. I believe this one has also recently become very profitable. And if we come over 233, so 130% return. So I like Uber, but I will only take little risk in it. It had dropped quite a bit, and I believe it's come back. Another Mara roll, 19 and 11, and I rolled it again and made some pretty good premium. 290. It wasn't the best return, but this is a little bit of a wider spread. One time Mara got down as low as 12 and I had to widen the spread. So, and then Clorox, a new Clorox trade. So again, you saw I closed it earlier in the month, so I opened a new one. And I believe the strikes are about where they were before. I made 223, and this is like a 73% return. So some of these dividend payers and some of the ETFs are, you don't make as high returns, but I'm okay with that since they're so much less risky. Then I had a bunch get assigned. I had Intel get assigned. Again, I'm not holding on to deep in the money covered calls anymore. I'm going to let them get called away. I will not sell a covered call unless it's above the cost basis. Typically, Intel might be the exception with that. Same thing with KINS. Well, KINS is unique. I'm wheeling it, so I wanted it to get assigned. So I sold puts at 15, then now I'm selling calls at 15, and it tends to work out pretty well. I make about $1, $1.15, $1.20 each time I'm able to roll it, which gives me a pretty good return. And I'm only doing 2 of these contracts, even though it's only $15. Shopify shot through the roof. It was so deep in the money I couldn't roll it, so I just let it get assigned away from me. Same thing with Seagate, another one of those. I've had a lot of these. It shows that I'm picking the right companies, but then covered calls really have clipped my wings, but I still have had pretty good returns. So Seagate also got assigned away from me. Hopefully the market will give us a second chance. We'll see. Twilio, I rolled 90.80, and it stayed pretty flat, 11.21, 90.80. Made 286, pretty good return, 97%. It's another one that at least hasn't shot through the roof, and they've got some pretty good numbers. UPS, this one of my few that expired, and I want to own more UPS. I do believe they're oversold. They pay an outrageously high dividend, but even if they cut that dividend in half, you're talking a pretty good dividend. XLK, another covered call, deep in the money. I let it get assigned away from me. And I'll look to make more trades. But again, it was a very profitable trade. It went up like 80 to 100. Some of these I put in place right at the lows of April. So Amazon, new trade, 205, 195. This one, it's been chugging along, 283, about 100% return. I really want to own some Amazon. Mara, another Mara trade, 1612, 215. So a really good return. Like I said before, I really like trading Mara. CRM, this is Salesforce. And I've always wanted to own some Salesforce, and they've come down recently. So a 220, 210, which was a 15 delta. Again, I try to stick to a 15 delta for these vertical put credit spreads. Made 247. It's like an 87% return. I went with less risk, which also lowered my return. Eat is one. It's probably one of my only ones that's pretty deep in the money right now. I think it's right around 125, but it moves. It can be back in at 150, 160 overnight. So this one I just rolled it out to 1121, brought in $334, and it was like a 78% return. Kens, this is the trade I talked about before. So I set up a new covered call after the shares got assigned to me, and I made, let's see what I made. I made 238, so I actually made a little bit more. So, it's a really good wheel trade. And I'm just, like I said, selling two cash secured puts at 15. Then once it's assigned to me, then I sell two covered calls at 15 and just keep repeating the process. And it seems to get assigned like once a month. If it doesn't get assigned away from me, I'll probably just roll it out the next month and should be able to pick up some good premium then. I might even let it expire, then roll it. So AMD, I rolled. This is 150, 140. And I rolled it out to 1121, kept the same strikes, brought in 274, and this was like 100% return. NVO, I also rolled it. This is Nova Nordisk. And this is the trade I talked about earlier. So I have the three contracts, rolled it out to 1121, brought in some pretty good premium. It's like a 78% return, but really nice premium. Next is Procter & Gamble. I've owned Procter & Gamble for many years, not as long as my Coca-Cola, but pretty close to as long. And I wouldn't mind owning some more. Right now, it's right around 151. It hasn't moved much. I rolled it out to 1024. I recently rolled it again and brought in 305. And had a really good return with this one. So on occasion, you can, with a company like Procter & Gamble, you can get a really good return. Fiverr, this was the covered call. I rolled it again, rolled it up to 27 and turned it into a true covered call. So I converted this covered call spread to a covered call. So I was able to buy the 26, sell the 31, and then roll up to 27 and sell the 27 and still make 207, which was quite good. It's like a 31% return, which is pretty good for a covered call. Mara, I rolled another Mara, 16 and 13. I have one or two, I think I have two positions in my IRA, one in my Roth and one in my Schwab. And like I may even do more. It's worked out really well. At some point, I do think they're going to shoot through the roof. They might actually be going up quite a bit today. So I rolled them out to 1031, 1613, kept the same strikes, made 145, which is like 157% return. And then last but not least, another Coca-Cola roll. I rolled a 6750, 4 contracts out to 618.26, moved it up to 70 and made 254, which is only like a 2% return. But that 2% is actually would be a lot higher. I'm basing this on $6,000 or $60 for each share, but my cost basis is way lower than that, probably a third of that. So overall, if I look at my numbers in my Schwab brokerage, I did 702. So I didn't do a whole lot in my Schwab brokerage, 702.92, which monthly is like a 0.14. So not the best in that. Now you might wonder, well, why are you doing so little in your brokerages? Now I am building this barn dough, and I am pulling a lot of cash out of it, so I don't want to be opening spreads that limit my ability to pay for some of these bills as they come up. I'm doing a lot of cash flowing for it. A barn dough is a barn dominium, so it's my son's shop will be in the back. He'll have two lifts, a 2-bar lift and a 4-column lift. I guess that's how you call it. You can tell I'm not an automotive person. And then in my Fidelity, I did 6,683, and that was like a 1.31% on a monthly basis. So much better. If you multiply that by 12, you're talking, what is that? That would be like a 16%. 10 times 1.3 is 13, plus you'd add another 2.6. So it's like 15, 16%. And then my Fidelity Roth, 2.42%. So I brought in 1734. And these are based on actual amounts from my brokerage. You can see them down here. So these amounts are based on these values here, which we'll talk about in a minute. So my total premium that I brought in, this is just for options, 9120, which is a 0.83% for all my different accounts. And my goal is to steadily increase that. Dividends and interest, I brought in 2308. And probably it's pretty 50-50. The interest has been growing as I go more and more to cash. But yeah, it's pretty 50-50. Half is dividends and half is interest. So total cash earnings, 11,428.98. And these numbers actually came from my brokerage accounts too. I took them right off my statements. So my total portfolio value was 1,094,008.98, which you can see is right here. My daily cash earnings based on the 22 days of trading was 519.50. And in my accounts here, my Schwab brokerage, I have 388,752, Schwab brokerage 2, 125,376 for 514,128. Now it's been staying pretty steady. It's still growing, but again, taking a lot of cash out. Probably this year alone, I don't know how much I've taken out, 40, 50, maybe 60,000. My Fidelity IRA, which again, you can't take money out of that. I haven't taken any out. I could take some out because I'm going to be 60 here soon. I could have started pulling funds out at 59.5, but I don't plan to pull any funds out for quite a while. 509.16, and then my Fidelity Roth at the end of the month was 71,754, so 580, and then together these were 1,094,898. So what are some of the more interesting notes? 22 days of trading for the month. That should be September. I forgot to change that. I did really well in my Fidelity Roth. Now my goal, if you watched one of my more recent videos, I'm trying to get that over 3% for my Roth. I may also try to get my IRA higher. And once I'm done with the barn dough and I financed it, then I'll probably up my goals for that to 51 trades, 14 calls, 37 puts. Some more puts than calls recently. Closed more trades than I opened. I believe I closed 2 more trades than I opened. My goal is to close more and be able to make more trades with no more cash at risk. And at the same time, having more cash in my account. Like I said before, I do think we're going to get some kind of a correction here soon. Again, I don't know when. I think it will happen. So it's a matter of when than if. If I was a betting man, I'm thinking it'll be a smaller correction, maybe between 5 and 10%. Wheel strategy works better right after a market correction. So if we do get a market correction, yeah, the wheel will work better. And also poor man's covered calls. If you get a significant pullback, it's a good time to be buying long calls. Covered calls are becoming biggest issue, clipping my wings. And that's been really surprising. I guess I did not, up until the last year or two, trade a lot of growth companies or momentum companies, and covered calls can be a big negative in a lot of ways. Now, I had traded Coca-Cola for years, and didn't have hardly any issues. I've had very few shares ever assigned away from me. But again, it's a whole different ball game with momentum and growth companies. The other issue with covered calls is they lock you into a security for too long. So, you might try to roll up and out, but if you're rolling it out a year or maybe even longer than a year, look at what your return is. If you're not at least getting like 15 or 20% return, you would have to decide, you may be fine with 10% a year. But in a lot of cases, you can't. So in my mind, especially if it's in a retirement account, let it go and then, find something else. The market will always give us opportunities. And I do believe it's a weighing game. No, it's a betting game short term, and it's a weighing game long term, meaning some of these momentum plays are just through the roof, like the Teslas, the Palantirs, even the APPs, and some companies like that, CLS, have really crazy PE ratios. I do think at some point they will come back to a more logical level. If you look at Cisco, I started investing in Cisco years and years ago. It had its heyday back in like 98, 99. And it's just recently reached those highs. So it's taken it like 25, 26 years to get back to its original high. And that's what might happen with some of these other companies that have crazy valuations. Due to cash flowing, some of my my trades are down in my brokerages. And again, probably we should have the Barndo done in the next 6 months, probably. Hopefully it's no longer than 6 months, but at that point, I'll probably start doing more trades in that. You do have to be really careful with capital gains. I tried to limit last year how much I made in my brokerage. I still got hit pretty hard with capital gains. So that's what I wanted to share with you guys. Let me know what you think. I do share this with my memberships. I share all my trades. I always encourage people with any of these trades I'm showing here, when I do post it, look at it, determine, do you want to do the trade? Do you like the company? Is it a company you want to invest in? Then look at the trade. Do you like the number of contracts? Do you want to do more risk, less risk, more contracts, less contracts? I really encourage my members to dig deeper and decide how they want to do it. I also have members sharing in the Discord their trades. And then if they do use one of my trades or copy one of my trades, then they will share with others how they might have made it different, like I mentioned before. So let me know what you guys think. Are you tracking your progress like this or doing something similar? Leave a comment. I try to respond to my comments within usually 24 or 48 hours. And as always, thank you for taking the time to watch, and I hope you have a wonderful day.